Well guys, last week I put out a video on this channel called When to Sell a Stock Exactly in 2021, and it was my worst performing video in terms of views, and so I said let's go ahead and do a follow-up to that video because that sounds like a brilliant idea. Why not get the least views possible we can on YouTube, okay? But no, in all seriousness, although that video did very bad views-wise, it helped a ton of you guys out, okay? And you got a ton of value out of it. I saw it in the comment section and all those sorts of things. So every once in a while, I have to do these type of videos that, you know, they just give out a ton of value. They might not be the brightest thing and the best thing for views, but these videos do end up helping you guys out immensely, okay? And so we're doing one of those type of videos here today. It's actually gonna be a whiteboard video. I just kind of put a few slides to get started here, but we're actually gonna get onto the whiteboard today. We're gonna talk about when exactly to buy a stock, okay? One of life's great questions. When is the right time to buy a stock? Because, you know, you can buy stocks at many different time points, right? And there are certain times to buy stocks that are better than others out there, okay? And the difference between buying a stock at the right time and the wrong time could be a difference of like making a Model 3 worth of money on a stock or making a Nissan Versa worth of money on a stock, okay? By the way, shout out Nissan Versa squad. I used to drive a Nissan Versa back in the day. It can be the difference between having a pool in your backyard because you made enough money off a stock to afford that, or have a porta potty in your backyard, okay? Maybe not a porta potty, okay? That might not be the ideal thing. But if I look at, like, if I pull up the public account here, let's pull up the public account. Let's look at this for a minute, okay? Some of these stocks I got in at literally the perfect time, like right before they started going up huge. Others I should have got in a little before. Others I should have bought heavier faster and I didn't add aggressively enough and things like that. So even, you know, somebody like myself that's been in the stock market for 12 plus years now, I'm always looking at ways to improve and ways I can get even better when it comes to buying a stock, building out a position, and doing all those right things. You'll never be perfect at it. You'll never get stocks exactly at the bottom or something like that, but the name of the game is always improving. Is something I try to do all the time. So hope you guys get an immense amount of value out of today's video. Hope you guys really enjoyed. If you don't mind, smash that thumbs up button. That helps YouTube channel out in a massive way, especially in a video like this that's not going to get a ton of views. Like we need, you know, as much smashing a thumbs up to help us in the algorithm with a video like this, guys, because I'm giving you out a lot of free value here today, okay? If you want to join Stock Hub, that is also completely free to use. That is our Discord chat for talking stocks with a ton of other investors all around the world. It is the best free stock chat out there. It's actually the biggest as well. So the biggest and the best. And then if you want to try to apply for my private stock group and you want to attempt to get in there, you might have that as one of the pinned comments down there. And by the way, we just had somebody reach 8 figures today. Massive, okay? They sent me screenshots and everything. I don't even have an 8-figure club yet. I think they're the first person in the group to reach 8 figures, meaning they have like 10 million plus just in stocks. Like absolutely, what a beast, okay? So alrighty guys, let's go ahead and talk about this big subject here today. When to buy a stock exactly, okay? Now, we're actually want to start with this video and then we'll kind of get into some of the talking points that I hear talked about a lot on when to buy a stock, and we'll talk a little bit about that and my perspective on that. Then we'll get into the 7 steps, okay? But before we get into that, okay, remember, when you buy a stock, you are essentially buying ownership in a company, okay? It's not just numbers, it's not just a ticker symbol, it's not just like some arbitrary thing out there in this world, okay? You are literally buying ownership into a corporation, okay? So if you go buy a share of Nike stock, okay, you are literally part owner of Nike. Okay, you might be a very small part owner of Nike, but you are nonetheless part owner of Nike. If you go buy a Tesla stock, you are now part owner of Tesla Corporation, a very small owner, right? But you are part owner of the company. This is what stocks are, okay? And so everything when it comes to whether you should buy a stock, whether you should sell a stock, should always come from this core perspective, be over everything else. That you're buying an actual corporation here at the end of the day. You are making a business decision to put your money that you have worked for into this stock over here, or to sell out of this stock over here, okay? This is so key in the whole process, because if you can't wrap your head around this, you can't even worry about all this, okay? And I've seen a lot of people who have tried the stock market and failed because they don't understand this one core thing before all the others. The valuations, the financials, everything else. Like if you don't get this, good luck getting everything else, okay? This is the most important thing literally in the stock market to really start making money, okay? Now, let's talk about some of these things, okay? Because these are things I'll hear, you know, people say, oh, you should buy a stock when this happens, okay? People say when the stock is going up, buy the stock. Well, it's uptrending, so it keeps going up. So get on the board because the rocket ship's just taking off. So it's just gonna keep going up, right? When a stock's going down, oh man, it's going down. So it's due to come back. It's going down right now. It's gone down 20% last month, so it's due to come back, okay? When the stock breaks trend, oh, the stock just broke trend, so now's the time to buy, okay? When the technicals say it's a buy, okay? And many different people have many different opinions on technicals and when that says to buy and things like that, okay? All four of these are looking at stocks from a perspective that I do not agree with at all. These are all looking at it from a perspective of it's a ticker symbol, it's just numbers bouncing around, rather than looking at it from a business decision standpoint, okay? This, you know, none of this is how real business people look at stuff, okay? They don't say, oh, well, the valuation of the company's going down, so we gotta buy it now, or it's going up, so we gotta buy it now, or it's shifted this way, it was up and then it's down, and now it's time to buy it. Like, no, okay? This is not how bosses make decisions, okay? This is not how Jeff Bezos and Elon Musk make their business decisions. They don't walk around saying, the valuation's down over there. No, okay? That's not how Warren Buffett does it. It's not how anybody that has made any huge money in this world makes their decisions, okay? None of them, okay? Like look at the billionaire list. None of them make their decisions based upon any of this, okay? That's not how you make real money, okay? You want to play around money, cool, go play around money. You want to make real money, you don't worry about this crap because it's all just a bunch of crap in the end. It has nothing to do with the core thing of you actually buying ownership in a company and you making a business decision, okay? All that's just, okay? When Jeremy buys, well, of course you can make a ton of money every time. If you just buy when I buy, you're gonna make a ton of money. No, I'm just kidding, guys. I'm just kidding, okay? But in all seriousness, okay? You know, when Jeremy buys, when Warren Buffett buys, when Kathy Wood buys, whoever you look up to in the stock market, you know, that's not the right perspective either, okay? And although you can make money, like if somebody's a super successful investor and they consistently pick winners and you're like, dang, that stock's up, that stock, you know what I mean? Like if you see that, it can be very alluring and attractive to just copy whatever they're doing and being like, oh, this person, they just continue to pick winners. The last 10 stocks have all gone up, blah, blah, blah. It's very alluring, but I'm just telling you that's, once again, not the right perspective you should come at the stock market. You should be making your own decisions, okay? I have as much respect for Warren Buffett as anybody. And a matter of fact, I've ripped off like 92% of my investing philosophy is ripped off from literally Warren Buffett, okay? I studied that guy like nobody I probably ever studied, okay? And I don't buy stock just because Warren Buffett's buying a stock. Actually, the majority of investments he has are not the majority of investments I have. And the majority of stocks I hold in my portfolio, Warren Buffett does not hold. Although I have more respect for him than everybody else in the stock market combined. And I still don't just go out there and buy a stock because Warren Buffett's buying a stock, okay? We hold very few of the same investments. I do hold Berkshire Hathaway stock, which does very well for me, and that's Warren Buffett's company. But outside of that, that might be one of the very few stocks that we both are actually owners of. Like literally, okay? And so this whole perspective, it's like, it's just the wrong, like Warren Buffett, he's 90, like, I don't know how much longer he's gonna work. I don't know how much he's gonna be on this earth, okay? And someday Warren Buffett's not gonna be here, okay? And so if I've just been picking stocks for the last 12 years based upon what Warren Buffett's doing, rather than what I'm doing, one, I would have got lower returns, but two, and most importantly, I wouldn't have learned for myself if I'm just copying him year after year after year after year, okay? Same thing with like a Kathy Wood, you know, she's got a lot of really good stocks, but at the same time, like if you just pick all the same stocks as her, some of them are gonna do really well, some of them aren't gonna do that well, but at the end of the day, it's like, are you really learning? If year after year after year, you're just picking the same stocks? It's one thing to hear somebody talk about stock and then be like, okay, let me look into this and see if this is the right stock for me and then making that decision. So it's another just to say, they're buying the stock, I'm buying the stock. They sold out of that stock, I'm selling out of that stock, okay? Like if you wanna really make money, you gotta learn this stuff for yourself. You can't just always copy. Like what if one day I'm just like, I don't wanna do YouTube anymore and I just bounce because like I have more important stuff to do. Like what happens if that happens? It's probably gonna happen someday. So when it happens, like if you don't know what you're doing, you know, it's not the right situation, okay? So this, no, okay? Before earnings, after earnings, okay? This is another thing I'll hear people talk about, like, oh, you want to buy it right before earnings because a lot of times these stocks will go up. Well, they could also go down. Oh, buy it after earnings because you don't want to get into a stock right before earnings because what if it goes down a bunch? You could have got cheaper. Once again, that's not looking at a perspective from a fundamental perspective, a valuation perspective. You're looking at it as like a gambling decision. Like, well, it might go up, so I need to get in now. Or it might go down, so I need to wait to get in until after. Like, no, that's just a wrong philosophy, okay? Before earnings, after earnings, before X dividend date. Okay, there's another one. You know, people think they're gonna try to time out dividend dates or something like that, okay? Keep in mind, usually after X dividend date, the stock price goes down by the same amount that they pay out in the dividend, okay? So, which means essentially like you didn't make good. Like if you think you could get that 1% dividend yield, the stock probably went down 1% that same day, if not more than 1%, okay? Because it has to balance out. So that's not really, you know, if that was a philosophy that worked, believe me, that would be like the easiest way of making money. It doesn't always work. And actually a lot of times it doesn't work, okay? That's another thing. In the market downtrend, in a market uptrend, okay? So some people say, well, the market's crashing, just buy. In a market uptrend, okay, you shouldn't be taking the stock market in general in terms of your decisions. I feel like right now in the stock market, 99% of stocks are at fair value or overvalued, okay? I feel like that right now. Doesn't mean I'm going to stop buying stocks because guess what? That means 1% of stocks are undervalued and are deals. And so regardless if we're in a stock market that's skyrocketing or a stock market that's crashing, I'm always looking for where are my opportunities with individual stocks out there and buying those individual stocks. All the BS about, oh, the market's going down, the market's going up, I don't care. I don't care. It's fun to talk about. We can have discussions about it. It's entertaining. But at the end of the day, that means literally zero to me buying Google stock or not buying Google stock. I don't care. All I care about is where that stock's at, where I believe that company's going over the next 5 years. That's what matters, what valuation it's at. That's what matters. The market in general, entertain me, man. That's all that's about. You know, if I ever watch like CNBC, like the Fast Money Show or something like that, and I want to zone out for an hour, I put that on and I'm like, entertain me guys, like talk about the stock market for the day. They're just throwing random opinions out there. It's entertainment, it's fun. But at the end of the day, I don't make investment decisions based upon whether the stock market's in an uptrend, downtrend, sideways trend, who cares? I'm in stocks because regardless what happens in the market, they're gonna do well. That's my name in the game. I'm buying into this corporation over here because they're gonna do well, no matter what happens. That's the type of companies I want to be in. I don't want to be in a company that's just going to do well because the stock market's doing well. That's not a good situation at all, okay? Some people say when it's a hot stock, when everybody's like talking about it, when it's a popular stock or something like that, okay? Once again, these aren't investment decisions. These are gambling decisions, okay? And there's a big difference between gambling. It doesn't mean you can't make money, okay? You guys know I live in Vegas. I live in Las Vegas. It's a city built on gambling. And you can get lucky on the strip sometimes and make a bunch of money, right? Doesn't mean it works over the long term. You want to make gambling decisions, make gambling decisions. Just understand they're gambling decisions. They're not business decisions. And there's a difference between a business decision and a gambling decision, okay? When a company goes IPO, IPOs have been hot the past year. You know, really past like 6 months specifically. A lot of IPOs been, you know, boom, boom, boom. Hey man, I can tell you that could go south really fast, okay? IPO market's hot 1 minute, it's like every single IPO is boom, boom, boom. Next minute it's really bad. And keep in mind, when it comes to IPOs, which is a company, if anybody doesn't really know what I'm talking about, it's a company that's just going public, okay? They're just hitting the public market so you and I and everybody else can buy shares in that company, okay? Keep in mind, when these companies go IPO, a lot of times they're overvalued, and a lot of times when you hear about a stock is up so much, oh, that stock went up 50% in its IPO day. A lot of times you weren't even able to get in on that deal. That was only like the inside of Wall Street was able to get in on that deal. And that stock might have actually been up 60 or 70% when it actually got out there so you and I could buy. And they don't even talk about the fact that a lot of the normal investors, the regular people out there, they're investing through Fidelity or Robinhood or whatever other apps out there, TD Ameritrade, those folks a lot of times might have ended up actually losing money. And so you hear, oh, that IPO is up 50%. And it's like a lot of the normal investors probably actually lost money on that day. While, you know, the inside people made a bunch of money, okay? So, you know, this whole thing, okay? No, okay? Let's talk about these 7 steps here, okay? So when you're talking about when to buy a stock, when's the right time to buy a stock exactly, okay? Before you can get into revenue and valuations and like philosophies and mindsets and anything like that, like the most important thing first off is, are you in a position of power? Are you in a pop, okay? Position of power means if you're going to buy that stock, do you have some extra money around for emergency expenses? And do you have some extra money around to buy more of that stock? Okay? And if you don't, then you're not in a position of power, you're in a position of weakness when you buy that stock. Because imagine you only have $500, okay? And you say, I'm gonna put this $500 into the stock over here. And then all of a sudden you get a flat tire. Then all of a sudden you gotta sell that stock. You put yourself in a huge position of weakness because you had no money around. Don't ever put yourself in a position of weakness, guys. That's like the worst like situation for you, okay? You gotta always keep yourself in a position of power. You don't wanna have to sell a stock at a really bad price, okay? Always be in a position of power. Step number 2, okay? If you're looking out at that company, you've done your full research on that, meaning you've read the 10K, 10Q, listened to conference calls, you put in the actual research work, okay? And you've studied the industry and things like that. You wanna look at that company for the next 5 years. And imagine out where that company's gonna be in 5 years from now. And are you 99% sure that the top line, meaning revenue, is gonna go up and go up probably substantially over the next 5 years, okay? If you're not 99% sure of that, meaning the only 1% is because you haven't seen it yet, but you're like, you're just like so there, like you can't even imagine that company not growing for the next 5 years. It's not the time to buy a stock if you don't feel like that, okay? If you're 50-50, you're like, yeah, the revenue might increase in the next few years, but I don't really know. If you're 50-50, no, it's not the stock for you, okay? You've got to be 99% sure before you buy that stock, okay? This is so dang key. No one wants to be in a stock that has revenue shrinking and is expected to continue to have revenue shrinking, okay? That scares away like everybody out of a stock, okay? Because that means that company's getting closer and closer to bankruptcy each day as their revenue continues to go down and down and down. No one is gonna wanna buy those shares off you if you ever wanna sell them down the road. Remember, the name of the game is to buy assets, stocks, have those assets increase in value over time because people are willing to pay more for them. And no one wants to buy some stock that the revenues continue to go down and down each year and are expected to continue to go down. You got to be 99% sure that those revenues are going to continue to climb. Like I said, you only get there from having a high level of understanding around that company. You can't just say, well, Amazon, yeah, the revenues, have you done any study into Amazon? Why do you feel that way? And things like that. And some companies are easier than others, by the way. Amazon's really a piece of cake company as far as like their revenues are going to obviously increase massively the next 5 years, right? Some companies are really, really simple. Other companies, you really need to do some digging, man. You really got to do a lot of research work there, okay? Step number 3 is a little more around valuations, okay? Let's talk about valuations for a minute. Super, super important, okay? So I'm looking for forward P's under 25 if the company's a single-digit top-line grower, okay? So a single-digit top-line grower means a company that might be growing 3%, 5%, 7% per year. I expect them to grow in future years, okay? And so I'm looking for under 25 if that's a scenario. Remember, if it's a scenario where I think the company's not going to grow revenues, it's not even worth me being in that company. It's not worth it. There's too many companies that will grow revenues each and every year for the next 5 years for me to be messing around with some company that will have revenue shrink next year, the next year after that. Like, no, okay? So it's got to be at least a grower. But if it's single digit, I'm looking for forward P under 25, which means essentially you're looking at the earnings for the next year, okay? And if it's a growing company, that's growing decent, I want it under 25. If it's only a single digit top line grower and it's over 25, I don't want a part of it. Other people can buy that stock, respect to them, okay? I don't want part of it. If it's trading at a 45 forward P and they're only growing revenues, I expect them to grow revenues 4% per year for the next number of years, I don't want part of it. Like, other people can buy it. It's not the stock for me at the end of the day. I don't feel like that's a good deal at all if that's the scenario, okay? If it's at a 19 and I expect them to grow 5% per year each year for, a number of years to go in the future, now we're talking. Now this is really interesting. Outside of that, no, okay? No, all right? And usually if you're buying into great corporations that have great management teams, bottom line will take care of itself, okay? Something to keep in mind there, okay? Forward P under 40 is if the company's a double-digit top-line grower. So let's say I'm buying into a company that I believe is going to grow revenues on average, 15% per year for the next 5 years, okay? Meaning they grow 15%, or something around there roughly, okay? I'll pay a 35, a 38, 33 forward P for that. That's perfectly fine as long as it's under 40. And then if I can get companies that are, even significantly under this, I'm looking really good. So for instance, I'll give you a specific example of a stock that would fit this category. Dropbox, okay? Ticker symbol DBX, okay? DBX. So this is a stock I was buying mostly around $20 a share, let's say roughly, okay? And its forward PE was around 19.20, something like that. Let's say like 19.5 for a lot of the shares I was buying. And this is a company that I expect to grow double digits for likely several years to go in the future. And so I'm looking at this stock and I'm like, even if it was a single digit grower, this stock's a deal in my opinion. But the fact that this is a double digit growing company, top line, it makes a stock really, really attractive. And so that's why I loaded the boat on Dropbox the last few months when it was anything even remotely close to $20. And even at 25, I could be loading the boat on that stock just because I'm looking at it, I'm like, it's up here. But yet the company's a double-digit double-digit top-line grower. That is extremely attractive, okay? Very, very important from a valuation standpoint. Because remember, it's not just about, buying into the right company that you think is going to grow in the future. It's about getting a valuation that you think makes sense for that stock. If you're not buying into a valuation that makes sense, you're only playing half the game essentially at the end of the day, okay? So fundamentals over everything. After fundamentals, we can talk valuations, okay? Now, step 4, when to buy a stock exactly, is before big dog sees it, okay? Big dog, I'm talking about Wall Street. I'm talking about fund managers. Now, you might think you have a disadvantage against fund managers. I can tell you, you are 100% incorrect. You have a massive advantage over fund managers, okay? Fund managers, let me talk to you about fund managers for a minute, okay? In Wall Street, all right? Wall Street, it's a lot more lucrative for a big fund manager or these guys on Wall Street to go out and play a round of golf for 3 or 4 hours with a big high net worth individual rather than looking into some stock for the next 3 or 4 hours. Because at the end of the day, if the fund manager gets a 10% return or a 12% return or 8% return, a lot of times that doesn't really matter. They just want to keep their relationships with people that have a lot of money. That's the name of the game. And so a lot of times somebody that has $700 million, super high net worth, maybe they sold a business and just have a ton of money and now they're 65, whatever, right? The fund is looking at that as we got to keep that relationship so they don't jump to the other fund over there and invest their money with those guys over there. Because those guys over there, a lot of times the returns don't matter. It's about the relationship, okay? And also, when it comes to these funds, a lot of times they don't even see what's coming. They're in their own little bubble world in Manhattan. And they're like in this little bubble world of Manhattan and they only see what's in front of their face and they don't even know what's going on in other parts of the country, okay? Like I remember a perfect example of a stock that I got in back in the day that they didn't even see coming was Cabela's, okay? Like, Wall Street in Manhattan, they don't even know about Cabela's, okay? It's like a hunting and fishing store. But these stores, I saw them doing huge volumes and Wall Street never saw this. And the stock was like $20, under $20. I'm like, this stock's a deal and a half and buying. Next thing you know, things go really well for the company. It's a $60+ stock. Wall Street was all piling in it because they're like, oh my gosh, look at this company. It's growing like crazy now. What is this Cabela's? They were so late to the game, okay? Tesla's another perfect example. Tesla's a stock that Wall Street was way late to the game to. They didn't finally start coming around to Tesla really until the stock had already gone up a ton. Where versus I was in the stock a couple years ago because I was looking at Tesla and I'm like, oh my gosh, I'm seeing this more and more everywhere I drive out here. If I drive to California, I see them. When I'm in Vegas, I see Teslas everywhere, especially in like the neighborhoods I live in. Like Teslas are a dime a dozen. I'm seeing them more and more in Arizona. And so like I'm seeing all this and I'm looking into the company. I'm looking into the what the company's doing and technology they have, how big of an advantage they have. And I'm like, this is massive. And Wall Street just wasn't seeing it. They were completely blind. They're completely blind because they live in their own little bubble world in Manhattan. And so you think like you have a disadvantage. And I'm just telling you, it's 100% incorrect. Maybe for like if you're trying to day trade and get in and out of stocks or something like that, like in the next 10 seconds, Completely agree. You probably do. They probably have some machine that does it way better and can get on that penny better than you can get on that penny, okay? Perfectly fair. But for doing what I do, business, making investment decisions, huge advantage to me over those guys, okay? I think differently than them. I'm a different age group than them. I can see trends that are coming so much faster than they can see trends. And by the time they jump on it, man, it's already, boom, it's already, way up there. Let's just put it that way, okay? So yeah, I love to spot these companies way before Wall Street. Newest one I've gotten in recently is TTCF, okay? TTCF, Tattooed Chef Corporation. That's a company I've been looking into and buying the stock very aggressively lately because I'm looking at that stock and I'm like, I think it's been, the stock's been anywhere from $15, $20. I think it's above $20 now, but I'm looking at that stock and I'm like, this is a perfect company. They're capitalizing on this huge growing movement in the food industry and the changes that are happening there. And I don't even know if Wall Street sees this yet. They will see it in a couple years, I can promise you that. But they don't see it today. And so yeah, you as a little guy, believe me guys, you have a massive advantage. Don't ever believe the BS that you think those guys have an advantage over you, because they don't, okay? And remember, when it comes to most analysts on Wall Street, most of these analysts on Wall Street, they don't even pick stocks for themselves, okay? And if they do, a lot of them aren't good at it, okay? So keep that in mind as well, okay? A lot of different things. The analysts aren't even really looking at things from a perspective of picking the right stock or not the right stock. They're looking at things from a perspective of, can they get the revenue growth rate right because they heard this from management team and running these sophisticated models and things like that. A lot of that doesn't really have to do with you being a successful stock picker, I'll be honest, okay? So that's step 4. Now for step 5 on when to buy a stock exactly, okay? Here's a big thing. This is a little bit of mentality type stuff. When you can explain your bullish thesis to somebody that's not even invested in the stock market, and they don't have to believe the bullish thesis, but just when you feel comfortable enough, you understand the company well enough, it's likely a sign that it's time for you to buy that stock, okay? This is huge, okay? People wonder why I still make YouTube videos, okay? Because I'm trying to explain stocks to normal people. No, I'm just kidding, okay? No, in all seriousness though, like I love doing this because I don't know who's coming across this video. You might be watching this, you might have 2 decades of experience in the stock market, okay? And I gotta still have some stuff for you, right? Some other person might be watching the stock market that's been in the stock market for 2 weeks and they're just barely looking into it. And so I always have to try to explain my bullish theses around companies and break the most complicated things down to as simple of a subject as possible. And this is a great thing for you out there to do this in your own life. If family and friends, probably the majority of your family and friends, if not all of them, don't invest, okay? They don't invest. They don't invest in the stock market. They don't pick stocks. We're talking about probably less than 1% of the world population pick stocks, okay? And even way less than that, if not 0.01% of the world's population actually does this on a high level where they take this super serious, they have the majority of their money invested, do what I do essentially, okay? So when you can explain your bullish thesis and you feel comfortable explaining it to somebody that doesn't even invest, that's a really good sign and you're super excited about that. Once again, they don't have to believe it because they don't really know, like if that is a good stock or not. But when you can do that, that's a really good sign. If you have a lot of trouble doing that, it's usually a sign that you don't really understand the company well enough and you need to get back in there and do more research, okay? Very important. Keep in mind what I just told you right there, okay? Step 5, remember that, all right? All right, guys, step 6, okay, as far as when to buy stock exactly. What I like to do is if I buy into a stock and it starts going down, which sometimes happens, like it's gonna happen sometimes, and I hope it happens. Like most of the time when I buy a stock, I'm like, please go down, please go down, please go down, okay? I hope it happens. Why? Because I like to buy more shares for cheaper. I don't just buy a stock one time and then I never buy it again. I'm likely gonna buy and buy and buy and buy, like several different times. Like the Tesla stock, we talked about that one. I bought Tesla stock like 8, 10, 12 different times. I have so many different batches of Tesla shares I bought in different accounts over time. It was ridiculous. And that's what I love to do with the stock. I love to buy. And so imagine you're in a scenario where the stock downtrends. So I like to buy more if it goes down around 3%. I like to buy more if it goes down around 5%. And we're talking about from the initial time you started the position. So let's say I buy XYZ stock for, I don't know, $10 a share and it goes down 3%. I'll likely buy more of it. It goes down 5% from where I started that position at the $10. Now I'll buy more shares, okay? And usually if it goes down 8%, 10%, 15%, 20%, very rare it goes down that much, like 20% from where I started buying. But if it does, like usually I buy a little heavier along the way. As long as I still believe in the company just as much as I did before, I will buy heavier, okay? And so this is actually my ideal scenario. What happens, unfortunately, a lot of times is I will buy into a stock at $10 and then it goes up to 11 and then 12 and the next thing you know it's $15 and now I'm already up 50% on the position and now I'm in a scenario where I'm like, shoot, I didn't get my full position built out and it's already up 50% and then it keeps going up. So, you know, that's the situation I don't like to be in. You know, when I initially build a position over time, that's great. But unfortunately, sometimes that happens right off the bat. And it's never an ideal situation. I'm actually much prefer this. And yeah, you just use a disciplined approach, like it goes down, buy some more, as long as you believe in the company. As long as this is a company that's gonna continue and you're very sure about, you know, the company and their prospects to grow in the future, like you're looking pretty good. And as long as you bought in where valuation somewhat makes sense, okay? And last one, step number 7, really good sign to know if it's time to buy a stock exactly now, okay? Is mommy, okay? It's mommy. If hypothetically you had to put your mommy's entire life savings into the stock, would you feel comfortable doing it? It doesn't mean you have to do it. Just like, could you even mentally go there? And like, this is a good like kind of like mental test for you. If you were to take your mom's life savings and put it in a stock and you feel comfortable, that's a really good sign. That means you're ultra bullish. If you have to think like 12 times about that and you're like, heck no, I wouldn't stick my mom's savings anywhere near this stock, that's probably a bad sign. That means you're taking way too much risk likely, okay, in a scenario. Unless it's like a spec stock or some scenario like that, which should only be maybe like 3% of your portfolio. Unless it's a spec stock, like all these other stocks, you should feel comfortable. Like if you had to put your mom's savings into it, you would feel comfortable in doing that. And if you don't, it's probably not the time to buy that stock right now, okay guys? So hope you enjoyed this video. As always, this is a super in-depth one on my perspective on when exactly to buy a stock. I'm looking at kind of those type of valuations. I'm looking at companies this way and kind of with this type of mindset and things like that. And remember, you can destroy Wall Street. You can beat the market. Don't ever believe any of that BS. But you got to stick to disciplined approach and you got to like actually put in the time and the effort. Not many people actually want to do it. They want to gamble money, or they don't want to do the research work. And like, it's like anything in life, you put in, you're going to get out of it what you put in. You put in a lot, you're going to get a lot out. You put in a little bit, you're going to get a little bit out. You don't put in anything, you're probably going to lose money, okay? So it's really up to you and what you want to do. So if you don't mind, smash the thumbs up button, guys. This won't be the video that gets the most views in the world, but I do appreciate the thumbs up. It helps the YouTube channel out massively in the algorithm and those sorts of things. So thank you guys for that. If you want to check out Stock Hub, it's absolutely free to do so. That'll be the pinned comment down there if you want to try to apply for my private stock group and learn everything I look for in stocks, how I run portfolios and things like that. You can do so also. I might have that as like the second pinned comment down there. Thank you for watching and have a great day.